My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. Of course, I'm Gareth Soloway here to deep dive into the markets from a pure chart and data standpoint. No BS, no hype. This is what we do at verifiedinvesting.com. So number one, I'm going to go over this in just a few minutes, but there's a looming black swan that I've just isolated down in Japan. We've got to look at that, folks. That could be something the market doesn't even have on its radar. Before we get into that, we're going to get into the S&P futures this morning. Taking a look, we are looking at a slightly higher open. Now, remember, today is one of those days where we could ultimately see a lot of just sideways quiet action as we await Nvidia earnings. So if we look here, folks, you can see this is where the S&P closed yesterday, right here. And so we are net positive just by a little bit. Now, futures were up a little bit more this morning. They are slowly creeping back towards the flat line. Looks like we'll open up about 15 points on the S&P today, which again is a small cry when you look at where we've fallen in just the last couple days and weeks. And again, of course, I go to this chart here. This is my go-to because it's so powerful for those of us that are technicians. We talk about how this parallel has marked every major low in the market going back to the COVID low. And it's also marked every major high, the bull market high here. And lo and behold, what are we seeing right here? Potentially a major cycle high. All right, so we'll continue to monitor that, but a nice breakdown yesterday continuing on the S&P 500. My first downside target, and again, keep in mind, it's not going to go directly there. We probably see something like this, and then eventually we find ourselves into the former all-time high from 2024 and early 2025, which we had the sell-off during the liberation tariff blitz, and then we came back, we broke out. This now becomes technical support on the chart. So we're looking at a downside target on the S&P around 61.20, give or take. That would be my first big level to watch on the charts. All right, we'll keep you guys posted as we continue through. All right, next we have to look at the NASDAQ 100. The NASDAQ 100 confirmed a breakdown 2 days ago, and we did continue to sell off yesterday. Today we're looking at a small bounce, but obviously everything about the market is going to change after hours today with Nvidia earnings. All right, Nvidia earnings, listen, they're going to be good. There's no doubt about it. They're going to be fantastic. Jensen Huang, he is a master salesman. He's going to make it sound like it's the best ever. The question I have is when we go through the details of the report, are there looming issues? What about data centers? We've heard that many big hyperscalers are slowing or halting data centers because of lack of energy to actually power them. We've heard about the depreciation of these chips and how it's being stretched over 7 years, when in actuality, it's closer to 2 to 3 years. All right. We've heard about other issues about money shuffling back and forth between these players to kind of formulate this massive demand that we keep on hearing about. Will there be any clue in the report today from Nvidia, or is it going to just be sunshine and rainbows and everything else that's going to help investors buy the dip again? All right, I'm curious because I think retail is still very programmed to buy the dips, but institutions are getting worried, just like I am, about the shenanigans in the AI space and the valuations pulling forward numbers in 2030, for instance, 5 years away, that again, we're pricing stocks at those levels. Okay, so let's take a look here. We have, again, a breakdown of this parallel channel on the QQQ. Small bounce so far today. We'll see where we end and then where we go in the after hours. The 10-year yield on the US 10-year here continues to chop in a tight range. We're right between this 4.16 and 4.05 range. And so again, we've kind of been hovering here. Now, there is the potential for a cup and handle pattern on this chart. We saw it on oil. It's now starting to form here, right? So again, cup and handles, you essentially have a low of a chart here, recent low, and then you have sideways bullish consolidation. This is generally looked upon in technical analysis as a bullish chart setup. And that could be very problematic because, again, higher rates, the market would freak out. Remember, higher rates slow the economy. We're already seeing a slow economy. Now, again, there's no guarantees the pattern plays out. It's just probability based, but it is starting to look a little bit more bullish than neutral right now on the 10-year. And this is why I think, and this is what I teased early in my game plan here, is that there could be a budding crisis in Japan. Let's get into it, guys, because could be why the 10-year is starting to look bullish. Taking a look here, number one, the US dollar to the yen is showing a major breakout. Look at the vertical move. This is the yen weakening against the dollar very, very quickly. Okay. So the yen again, you can see the beautiful trend line here. The yen again is soaring over the last week or two. Really, you could go back to October 1st. This move continues and it is a breakout. Okay. This implies the yen is going to continue to weaken, possibly going back to periods where we had a pretty big crisis with the yen carry trade. All right. So this could be something. Now, this is not it. This is just one indicator of a problem arising in Japan. Next, we're going to go to the 10-year yield. Look at the 10-year yield in Japan. It is soaring here, folks. Look at this move. And remember, the problem here is that Japan has debt to GDP of about 240%. Now, the US is 130% debt to GDP. But again, this could be a budding signal, right? If rates go up and Japan has this much debt, how much money do they have to use to service that debt? We know in the US, we're already here paying $1 trillion in interest a year. But what I'm seeing here, if rates continue up in Japan, it is going to start a cascade effect in the debt markets that, again, I don't think people are talking about. And you hear these things first right here because I study the data and the charts every single day. Night and day, I'm focused in on charts. I'm not on X looking at hype or any of these other social media platforms. It's all about the data. And that's how you discover these things ahead of institutions, how we compete and beat the institutions at their own game in trading returns. Okay. So again, watch this closely, guys. The 10-year yield in Japan, this is very high for them. Keep in mind, remember, they had negative interest rates earlier on, right? I mean, look, down here in Japan, you had negative interest rates. Look at the run the 10-year has had, and look at this vertical move just in the last few days. This is going to cause problems if it doesn't pull back on their 10-year yield and their interest rates. And then you coexist that with the confluence of their currency weakening. What does that tell you? It tells you that they may have to start printing money, and that's why the yen is weakening against the dollar. Then we go back to the US 10-year, and wait a minute, we're getting a bullish pattern. The US debt to GDP is also maybe signaling a pop because of credit risk here in the US, debt risk. This is probably, again, the biggest thing today I'm unveiling in this game plan, even ahead of Nvidia earnings, because it could be a black swan event. Let's keep it on our radar, folks. Hopefully it gets under control so we don't have that scenario. All right, let's go on to some earnings this morning. Target reporting earnings. They beat on earnings by 2 cents, but missed on revenue. You can see the stock is lower. The big issue here is this, folks, is that they basically warned going forward. They cut guidance and they said the holiday season is not shaping up to be good. Now, Target was already trading at multi-year lows, and it's down again on earnings. And so this is a big deal here, folks. We go to our daily chart. I've isolated down my level already here. Let me show it to you guys right here. See this beautiful trend line connecting the pivot low from October 2023 to the low here in April 2025. If we tag this down here around $80, this should be a good swing trade opportunity. As a day trade, I like it as well there. So again, I don't know if it'll get down there. It would have to drop another $5 from where it's trading pre-market, but that would be a good day trade / swing trade opportunity. Now, remember, we've just heard from Home Depot yesterday that things aren't going well. All right. Home Depot yesterday came out with not so good guidance either. Here's the chart on Home Depot. Look at what Home Depot did yesterday. So again, we're seeing more and more cracks emerging in the consumer in the US, which is the backbone of our economy here. And if the consumer is pulling back, especially that high-end consumer, which has been, basically the high-end consumer has continued to spend. Why? Because the stock market keeps going up. Well, all of a sudden, the stock market's not really going up. We haven't made a new all-time high in like a couple weeks, right? Which is weirdly enough, it's very abnormal since the April lows to not have a new high basically every week. So we have to watch here. If this continues, this will hurt that high-end consumer, which will then cascade even more to the economy. But again, if we're looking at Home Depot again down about 6% yesterday. We'll have some good support around 325, but I'd still be very careful as a long-term investment. For me, this is more of a short-term potential level at around 325. Microsoft cascaded lower yesterday. Again, it's trading down a little bit today. Look at this double top here and then the rejection, right? Boom, to the downside. Now, interestingly enough, they saved it yesterday from closing below this low. So notice how by the end of the day, Microsoft closed back above. But if it closes below this pivot low, which is this pivot low right to here, if we get below here, we should be headed all the way back to our highs from 2024. That will be your target zone. I'll start looking at a bounce opportunity on Microsoft in here. Now let's talk about Nvidia, folks. So Nvidia reports after the bell. Okay. Now, like I said, it's going to be good earnings. There's no doubt about it. And Jensen Huang, he's going to spin those earnings amazingly well. But once we suss through and look through the details, the fine print, essentially, that's where the market's going to determine where we are going on this AI trade. So we have the potential to have a big bounce day tomorrow or a big drop day tomorrow. One or the other is likely based on the repercussions or the analysis of those earnings. Now, looking at the chart, is there any clue? Well, needless to say, it's not great to see Nvidia close below this trend line going into earnings, right? But there's a but here. You have not confirmed the breakdown, okay? Now, again, by the end of today, could we confirm it? We could, but right now, Nvidia is actually up in the morning session. So again, right now, I'm unsure about the direction in the near term that Nvidia will go on earnings. Again, just calling it like I see it. If I'm unsure, I'm going to tell you about that. We could bounce very easily back, let's say, to about 200. Or if they're not good earnings, we could flush as low as 167 to 166, maybe 170. There's a gap fill right in this area here. Now, notice how I specify in the short term, it's hard to know the direction. Longer term, we have a very clear idea where the semis are going. And that's where we use our bigger time frame on the SMH chart here to show us that, again, the extension of over 100% in 2021 yielded a big pullback of 45%, 100% extension above the 200 moving average in 2024, 40%. And look at what's already starting to happen. And so the idea is, even if the SMH bounces, the pull from this is going to, again, even if we go like this, it's still going to pull it back down towards this 200 moving average down in this range. Okay, so again, mid to longer term, and remember, my longer term, keep in mind, my longer term is much shorter than most people's. Long term for most people is, 5, 10, 15 years. For me, it's like midterm is like 6 months, long term is like 12 months, right? I mean, that's long term to me because I'm a swing trader. I'm a shorter term trader, right? But in any case, that's the idea here going into these Nvidia earnings. Now, Bitcoin. So it closed below on Monday, this trend line. It did not confirm yesterday, and today we'll watch to see if it confirms. How do we know if it confirms? If it closes below Monday's low right here, basically 90,900. A close below that confirms it, and the odds would heavily start shading continued downside into this 73 to 75,000 level. All right. If it doesn't confirm, it still leaves the opening for it to recapture the trend line and then get a bounce back up. Okay. So again, really watching the price action today to see where Bitcoin could go. But again, I think it's important for us to just remember that the charts on Bitcoin have predicted it perfectly. If you focus on the hype on social media, You heard, oh, it's going to 250,000 by year end. I'm still hearing that. I'm still hearing that. As of now, the charts, nothing in the charts is telling me that. Let's be crystal clear on that. The charts, when I just look at them, the max upside into year end in actuality would be this trend line up here at around 128,000. And I'm not saying it's going there. I'm just saying that's until that breaks, I can't assume that it can get above that because it's proven since 2017 that it can't get above that line. So who am I to say, oh, this time's different, right? I mean, everyone loves that term. Oh, this time's different. You know, I've heard that in every bubble, 99 to 2000, 2007 going into 2008, 2009. I keep hearing it. This time is different. This time is different. And you know what? It's kind of not different. It's just human psychology is greed and fear. That's what rules the market. And does that change? Do people all of a sudden in different market environments not get greedy? I don't think so. Do they ever not get fearful when the markets are dropping? Nope, they get fearful. That's why the VIX is the VIX. It tells us that, right? So in any case, just keep that in mind. You know, common sense is what technical analysis is all about. And that's what we're watching here. Notice how I'm not making a call yet. All right. Why? Because I don't have good probability. So yeah, we're below this line, but if we don't confirm, we could go back up. If we confirm, the odds strongly favor a move down here. Really important information. All right, gold. Gold again, which saw massive hype right up here. I said, nope, it's likely going to pull back. Look at the 1979, 1980 chart. It's identical, and it did pull back. Now, the big question is, as we chop in here, are we going to see a rally and a break of 42.50 to new highs, or are we going to come back in and break 38.90 and break down towards 35.36? Right now, what we're looking at is what are we creating, guys? We're creating a wedge pattern, right? So basically a clear wedge pattern is forming on the charts. What's a wedge pattern? A wedge pattern is price that is getting in a consolidation. Essentially, volatility is being sucked out. Essentially here, let me draw it here. So you have this up move, you have this down move. Price is most volatile there, and it gets less and less volatile, right? Until it's forced to either break out or break down, okay? And that's what we're watching here. So does it break out, in which case new all-time highs, or does it break down, maybe going here? Either way, my mid to long-term analysis is further all-time highs, but I'm still a little bit skeptical unless this debt market issue in Japan starts to roil, and then I do think gold could go up significantly. So just keep that in mind. You know, what we're looking at with Japan and what I've talked about earlier in the game plan, the 10-year yield and their 10-year yield, I should say, the Japanese 10-year yield, and the US dollar JPY, Japanese yen, those would be scenarios where if something does happen, gold actually could rally here and not get down to 3,600. All right. Other than that, if that calms down, I still think gold comes in a little bit more before eventually making its way up. But remember that, guys, you heard it here first. Watch what's going on in Japan. It sounds like it's a world away. It's actually significant. Okay. Couple more charts to go through. Let's look at silver here real quick. Silver today getting a small bounce as well. We can see an uptrend, ascending trend line here. That's going to mark, if we break that, we're going to get a bigger dump. And then we have our double top right up here at our parallel. Okay, so again, we're watching our 54 and change level. And then down here, we're watching 49 and a quarter. You're essentially getting sandwiched. This is another type of wedge pattern, by the way. This is another type of wedge of consolidation. You have a flat top and an ascending trend line. And price, again, is getting smushed in between. We can see it right here, right? Price is, again, getting smushed tighter and tighter and tighter. We have to watch to see which way it breaks. Now, we had that cup and handle on oil. Oil, once again, getting rejected off of that. Look at that, folks. So amazing, because it keeps trying to break out, and then we get rejected again. Look at right over here. We had this green candle into this trend line here, and then a big red. Up it goes again, tries to break out again, and rejected. Now, it's still a bullish pattern. That's just the nature of the technical pattern. But again, we have to see, we haven't seen a breakout yet. So we have to continue to monitor it. Now, how would the cup and handle fail? Cup and handles fail if you ever take out the low of the cup. Then it can no longer be a handle. You don't really ever see a cup and then a handle like that, right? Usually it's a cup and then like this, right? You have a little ladle or whatever you want to call it in that scenario. All right. So again, love kind of teaching in these. You guys know that's my bread and butter. Is I love to teach you guys. I love to see the light bulb go on above your heads, and you start to make better decisions on investing and trading. Next up, we have this chart here. Again, we're starting to rally on nat gas. This has been my upside target for quite some time. If you've been following me, you've basically seen this chart over and over again. We touch base on it daily because it is important. Again, look for that $5 to about 5.30 range of resistance. Today, we're getting a nice push. Now, can we take out this high? If we do, hop, skip, and a jump into resistance on nat gas. I will, once we get above 5, I will contemplate a short on nat gas, but obviously I'll wait for that to happen and double check the pattern formation. Always remember, folks, you can't always assume. Like a lot of people, they'll be like, oh, well, what's your level on XYZ? And I'll give them my level, but you have to understand that level's valid for like a few days, because once you get too many pieces of the puzzle, the whole pattern could change, right? A pattern can change, the setup can change. And so you really want to, if you're a trader, you can't just be like, oh, I like that level, so I'm going to buy it a year from now. You don't know what the chart's going to look like in a year from now. It might actually tell you it's going to go lower. And oftentimes things do. And so we have to always be willing to adjust our views versus being rigid. Rigid is the characteristic that makes people lose money. It's when emotion gets involved and they're unable to say, nope, things have changed now. They're like, no, it has to go there. It has to go there. That's not what we want to do. All right, I got to get going to my trading room, the live day trading room at verifiedinvesting.com. As always, folks, come over there, check it out. You guys are more than welcome. We've been crushing it lately because the volatility gives us so many great day trades. Again, check it out. They have day passes, we have week passes, we have monthlies, whatever you want. It's there at Verified Investing. Come on in and join me for the day of trading today. Have a great one, guys. Take care.